Thank you for joining us at xm.com for today's Daily Market Comment by Raf Boyadjian. I'm Christina Marujos. Treasury yields headed higher and the US dollar recovered further from multi-week lows ahead of what may not turn out to be an uneventful FOMC meeting after all. The Fed will announce its latest policy decision at 6 o'clock GMT, with Chair Powell taking the virtual podium 30 minutes later. The U.S. Central Bank is widely anticipated to keep monetary policy and its guidance unchanged today. There seems to be a strong consensus among FOMC members that the upward pressure on prices that businesses are experiencing at the moment won't last. However, markets are not so convinced as food and commodity prices keep ticking higher, leading to a fresh surge in inflation expectations. Bond markets are reacting accordingly, with a 10-year Treasury yield rallying yesterday and climbing above 1.65% today. However, there is a risk that if Powell acknowledges a strengthening recovery in his press conference today, markets will have a hard time believing his pledge to keep rates near zero through 2023. The Biden administration's massive spending plans are also weighing on treasuries. President Biden is expected to use his joint address to both chambers of Congress later today at 9 p.m. ET to sell his $2 trillion infrastructure and jobs plan, as well as the recently unveiled American Families Plan, amounting to an additional $1.5 trillion. The tax hike proposals have had some dampening effect on equities, but so far the reaction has been limited. Nevertheless, if Biden reveals new spending ambitions on top of what has already been outlined, it could stoke Treasury yields. On Wall Street, however, traders will be more wary of the Fed and on the latest earnings releases. Record earnings for Q1 have given stocks only a marginal lift, though that could change following Microsoft and Alphabet's stellar results after Tuesday's closing bell and more big tech earnings on the way. Apple and Facebook will report their earnings after today's market close. The S&P 500 and Nasdaq Composite both closed lower on Tuesday, and futures were last pointing to a mixed open today. In currency markets, the dollar index continued its upward crawl but was lacking momentum. The Japanese yen was underperforming again, while the Australian dollar is not having a good time either. The Canadian dollar, meanwhile, eyed domestic retail sales numbers due later today as it hovered near 6-week highs against the greenback. This was today's Daily Market Comment. Thank you for watching at xm.com.